Alrighty, good morning, everybody. It is Wednesday, March 16th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. I got a chance to get a number of eye levels up last night, so let's just go ahead and jump into everything and get down into those levels as we go here. So jump up now to our quarterly, our monthly, and our weekly. And again, nothing really has changed on these higher time frames. Our weekly does have, like I said, as of yesterday, I think, yeah, as of our rollover yesterday, we do have a potential weekly bullish divergence right now. So I'm still considering and watching this. Another clue would be a break above last week's highs. So getting up above 2675 here. Again, we would have a bullish engulfing bar, right? So this bearish bar right here, we've got encompass larger than the low and the high there. So if we can get a bullish engulfing bar and break that high there, we will potentially have another clue that this could be an attempt for a turn. Again, I'm not arguing that there's going to be some major bounce just because there's a little potential weekly bullish divergence right now, but it's something I want to be aware of and continue to watch to see if we do actually get the follow through. So that's still showing up there on the weekly. And let's see, let's go down into the daily here. So yesterday we did get some bullish follow through. For anyone who was there trading yesterday morning, it was basically just a continual trend higher. And let's just take a look as far as divergence goes here. We actually do have a little bit of a bullish divergence going on off of that low as well. So just looking at that previous swing, seeing that we're coming down lower, and we actually pushed just a little bit higher there on RVI. Very slightly, but that is technically some divergence there. So we do have, as of yesterday, as of the close of yesterday, a weekly and a daily bullish divergence going on. Does that mean we're going to get a 200, 300 point push? Definitely not. But it means there's potential in the cards right now that that could happen. So what do we need to do? Like I said, we need to get through last week's highs, and then we need to get through this high right here at 43.2675. So getting up through 2675, I believe that was last week's high, if I'm doing my math right on these candles, and then we need to then come back up to this major swing up here and get through. And you can see I believe I highlighted this area yesterday. Coming across here, we do have kind of this area to me makes sense to be a potential trouble spot for the bulls. So again, if we do get continuation off of this low, we got to get through that 26 high, and then this little shaded region up here right from the swing high itself, right around, what's the actual number? 44.1150 up into that swing low over here, which is a low of 44.31 quarter. So that little 10, 20 point range in there looks interesting to me. I think that's outside of that, that's all I have here on the daily chart. You can see we got a really nice bullish divergence to that 40.9450 low, an attempt to break out. We got resistance right where we expected there to be resistance, and then pulled back, and we're coming back to test these areas, but now we're getting potential reversal back up right now. So let's come down now into our 4-hour chart, our intraday chart, and take a look at what's going on. So remember, we drew in this potential wedge formation, I believe 2 days ago now, back on Monday. And it's just interesting to note. So we didn't hold. Originally, remember, it was coming up off of this low here. And we actually did bounce right off the trend line. It was the low of, well, Monday, I believe. The low of Monday was the swing low of the trend line. But then in the overnight session of Tuesday, the market went ahead and came down basically to come test these lows again. So you had to redraw the low. But the high right here, as you can see, we came up right to the end of the back of the trend line here in the overnight session. So again, does that mean that we're going to just sell off now because we're at the back end of a potential trend line here? No, but it is something we need to be aware of coming into the open here. So it would be a logical spot to see a potential turn. Again, seeing this kind of constriction going on, lower highs, higher lows, wedge formation here. So it would make sense to see a pullback from there to come down and test the bottom end of the trend line. We do have a nice bearish divergence up there potential. Remember, it's actually, I shouldn't even draw that arrow in because this candle has not closed. So we do have up until 7 a.m. Pacific, 10 a.m. Eastern. So when this candle closes at that point, if we still have this scenario that we have right now, there will be a bearish divergence argument off that high. Remember that with a 4-hour candle, there's a little bit of time involved. It's going to take longer to see if these signals actually follow through. So even when this candle closes, we have to wait for the next 4-hour candle to kind of respect that potential signal. So we'd like to see some continuation in the direction of the signal that we see forming. So we'll watch that, but right now we're right at the trend line with a bearish divergence on the 4-hour. You could even argue here on the daily, going back up one time frame here, you could technically argue that we are a little bit lower in price right now, assuming we don't come up to break the high of 26.75 here, and we're lower in price, but RVI is flat, if not slightly higher. So there actually might be an argument for the bears there, but this daily, it's way too early to say anything about that because this candle has all day to form. So I don't want to say anything. But the 4-hour for sure looks like there's a nice clean one. So we'll pay attention to that. In the grander scheme of things, what I like to do here on the 4-hour is just kind of go through the general idea of what the charts are saying, and then we'll jump down into the 60-minute and start looking at specific levels. So just looking at the most general scheme here, we have the previous daily low, we have the previous daily high in red, and then we have our famous orange power level and 50% of the previous day. These are giving us a very general scheme as to what we want to be doing. So obviously staying above the magenta line, the red line, and the orange power level right now are all bullish clues. Again, assuming that price can hold and stay above them, that will be a clue for an attempt to push back up to test, again, those highs that we talked about over here at 44.10, 44.11, up into the major swing low at 44.31. In fact, what I should do is mark that major swing low because this, I believe, is the major 44.41 major swing low we were watching on the older contract. I might have things messed up. Give me a second. What's the swing low? 31.25. I might have numbers mixed up just because there are specific like 31.25 for instance, but then it might be 43.31.25 versus 44. I'm getting them mixed up because every day we're like we're like 42.91. Next day we're up at 43.91. I'm mixing up those first two numbers because we just kind of traverse back and forth between so many different I don't know what the word is, but you're 44 something, you're 42 something, you're 45 something. So the last two numbers are what stick out to me, and sometimes I get them mixed up. I need to make this a dotted line as well. And we want that on all charts. Oops. Okay, so we got that up there. So again, the general scheme with the daily power levels we just kind of mentioned. And then I did go through and mark some of the major structure zones here. And you can see that right around this 43.50 area is kind of the dividing line so the major structure zone is up around 44.50. So there we go again, 43.50, 44.50. So 44.50 all the way down to just around this 4240, 4250 area. But bifurcating that right here at 4350 is that line that's basically right up at the highs that we need to get through here. So remember 2670, 26 or 28? 2675 here. If we get through there, 50% of this whole leg is also basically right there. And then that dividing line I just mentioned is at 4350, just another 25 points. So there's a little section in here that would make sense as resistance if they do get through this current overnight high. And I hate doing this because you guys know I trade with maybe 2 points of risk on my setups. I hate wide ranges because then, it leaves a little bit of interpretation to where I want to hang my hat. But this is just kind of how it is. We've got the swing high at 2675. So we need to draw. That's something we want to be aware of. And then it goes up into, again, unfortunately, it's like a 20-point range, maybe 25 points, but right up into that 4350. And hopefully I can draw this accurately. So we basically have that 2675 up into 4350, and 4350 again, give or take a few, right? So, I mean, the actual swing high I'm concerned with is 49 even, but 50, again, give or take a few ticks there, down to that major swing high. That's going to be a resistance that I would expect to see here. So, again, if they continue to get through the overnight high. A little bit further than that, up into the 61.8 retracement area, we also have that last what could be considered maybe a supply area here where we got a major sell-off. So this shaded zone that we were watching yesterday is still valid here. So the 61.8 is 92.50, and it's basically 92.50 up to that major swing high at 44.11. Again, I hate that we're really wide ranging here, but you also have to consider that you could play the bottom end with tight risk and the top end if that's what concerns you. The other swing low that we need to be aware of here is 1550, and they're close together here. So let me just update this. 1550 charts. So there are two major swing lows I'm watching. The first one happens to be right in there, and you know what this is telling me? We actually want to hang our hats on the back end of that swing low at 1550 and that swing high at 1150. So we kind of can tighten this up. We can say 1150 to 1550, a little 4-point range. That's something I can work with. And then we do have the actual 61.8 level itself at 92.50. So if we do push up again and get through this first shaded region, there's just you have to deal with the fact that this is all chop in here. So there's going to be like a shitload of levels, and you're going to say, Justin, there's a level here and then 5 points, and then there's another 5 points and another and 2 points. It's just the way it is because there's so much garbage that we're pushing up into here. So bear with me here. We've got the 61.8 itself. Again, we've seen the market push right into a retracement level and reject to the tick over and over. So be aware of 92.50. A little bit further up is that actual major swing high pushing into that major swing low from 11.50 to 15.50. If that doesn't hold, we're right up into the other major swing low at 44.31. And let me go back here and delete this out. And then a little bit further than that, through that swing low, that major swing low would be right to that area that I said is kind of like a dividing line between the larger structure that I outlined. That, again, kind of outlines a smaller little structure zone down here. So that would be 44.50. And then any further than that, if we get through this little area here around 44.50 and we can get through that major swing high at 44.75. It's all open space in my opinion up here. There might be a minor level right around 44.12, 44.14 there, but a pretty nice straight shot all the way into that major resistance that we kind of emphasized. Remember on the old contract, I believe it was 45.70 to 45.80 area. And on the new one, it's similar, 45.70 to 45.75 or something. So that major area is going to be in the cards if we do get through all the junk that I just mentioned. On the flip side of things here, and we're going to jump down to the 60-minute and look at specific levels here, but on the flip side of things, if we don't get bullish follow through to the upside, and remember that could be that could be that could be what's going on here. That could mean a pullback though before we actually launch back up, right? So it doesn't have to be just kind of a straight line and then we start playing in there. This morning it could be just kind of like, it could pull back, it could come all the way down into the magenta line or maybe even further and then eventually come all the way back. And when it does finally come back, these are these levels that we're looking at as potential resistances. Now, there's one thing I forgot to mention right at the beginning, right out of the gate, and that is we have the Fed announcement this afternoon. And because of that, the idea is the market could be pretty slow and indecisive here until all that starts to come out at the end of the day. And if that is the case, we might have to be pretty careful this morning with our trading, kind of like for the last few days. So just be aware of that. So if we pull back, we just covered everything that could potentially give the bulls trouble on the upside here. Again, if we start to get that follow through. If the bears come back in and we start to sell off, we have to consider what's below us, what's below this main area right here. And remember, we could still, because it's FOMC, this Fed announcement this morning, it could just chop around in here, right? We could peek out, get everyone on the long side, and bam, come right back in, come to the bottom. And this could be the whole day. It's just chopping around until that announcement at the end of the day. So just be aware of that. But if we do end up, if we don't go sideways and we do start to trend to the downside, what do we have here? Well, first of all, there's the major daily power levels. Getting below them, getting below each level is going to be more and more weight on the bearish side. And if we do get through the low of yesterday, what is that opening us up to? It's again, just like we've been saying, opening us up to the major lows from February. In this case, it's now 40.94.50. So if the low at 41.29.50 does break this morning, where I think it's a nice straight shot right to 94, there might be, again, a minor level or two in between that we can be aware of. But overall, I think a nice clean shot from 41.29 down into that 40.94 area, which would be a nice 30-point push. I think you could make some decent money on 30 points on the ES. Any further than that, I don't really have anything else marked out here as far as structure goes or anything. But if we get through that 94 area, it's going to open us up to the major levels that I have marked here on my 60-minute chart. So let's get into that, and then we'll wrap things up. So 4 hour, I think, is basically all cleaned up. Don't forget, before we jump down to levels, don't forget that off of the overnight highs, if they don't get through the swing high from a few days ago at 26.75, we will have a nice clear bearish 4 hour divergence for whatever it's worth. So let's get down now and get into these levels. And again, you can see that we're basically holding the trend line that we put on the charts on Monday. So the potential for this to get a pullback back into the middle of the wedge, that would be a good expectation. So don't discount that possibility here. On the flip side, we could get continued bullish cooperation here for the attempt to break out, right? So let's see what levels we're dealing with this morning. We cannot ignore the orange power level that we're pulling back into right now. In fact, we look at the overnight leg from the overnight low, which happens to be one of our power levels that I put on the chart yesterday, yesterday afternoon, right to that power level, or sorry, eye level, and pushed up into the overnight high. Look where the 38 retracement is right now, right into that orange power level. So I think that might be a good try there. It's probably the most aggressive level you could try, but there's some sense to trying it. One other thing, let's take a look. The 61.8, just give or take maybe a little bit below it, is yesterday's highs. Excuse me, I've got a little bit of a hiccup here. That previous daily high, again, major wick high of yesterday, just below the 61.8 retrace. Another level that looks pretty nice to me. Oops. I see 76.50. Yeah, so those are the two that are sticking out in the most immediate time right here. Would be somewhere around the orange power level or somewhere around the daily high, the previous daily high there. Um, Getting a little bit deeper, 56.50 is one of our new major eye levels. We also have a major overnight swing high sitting just a few ticks or a point or two above it. So I'm going to highlight that there. This major swing high is 58.25. So 58.25 into 56.50, a little, call it 2 point range there. Would be another level that looks interesting if they do not hold at either of these daily power levels. So watching that. And then we want to consider the smaller fib is the fib from the overnight low up to the overnight high. The larger fib would be the whole leg from the previous daily low to the overnight high. And in this case, it's going to bring us right into here. So we've got the two eye levels, the two minor eye levels, lining up with the 38 retrace right around here. And then a little bit further, this shaded area that we were watching yesterday as our first expected resistance zone, I'm pretty sure that's what we were looking at there, is still a nice potential support zone if the market comes all the way back down. And we're going to tighten this up just a little bit. Right down into just about 42.01. So we've got 96.50 to 42.01 as another little zone. What else can we eke out of the charts here? We're getting close to the open. So we've got a couple levels below us that we could expect as potential support levels. That is if the bulls stay strong here. Otherwise, we're going to have to get short and take profit at these levels below. Also, keep in mind that we have this little zone right here, right around the 70 to 75% retrace of the leg, which is also a nice little ripe zone. So this would be the swing high at 82.75 down into 78. So we got that on there, and I've got to go ahead and copy these over, and we're going to have to jump down to the short time frames and get ready for the open because it's literally going to open any second here. Now, keep in mind, we got to be very careful here in this market. So don't need to get super frisky here. It looks like the market has just opened. All right. So have a great day, guys. We'll be back tomorrow.